Welcome back to Investing Talk podcast. Today we're tackling a question a lot of you have asked. Is Bank of America a good time to buy right now? We've gone through quite a stack of sources, detailed stock analyses, market outlooks to bring you the most important insights. Our mission today is really to unpack the different viewpoints, weigh the pros and cons, and help you understand the whole picture so you can make an informed decision about this, financial giant. And before we dive in, if you find value in these discussions, please think about subscribing, liking, and maybe leaving us a comment. Your support really helps us bring you more of these explorations. Oh, and if there's a specific company you want us to look into next time, just leave a comment below.
Okay, let's unpack this. When we look at Bank of America, what do the core financials tell us about its strength, its position in the market?
Right. Well, what's quite fascinating here is that Bank of America has shown, pretty stable revenue and earnings growth. It's managed to maintain consistent profit margins compared to its major peers.
To give you some numbers, its return on equity, ROE, is 11.52%, and return on assets, ROA, is 0.95%. These figures, they really show robust profitability. I mean, even if its ROE trails slightly behind Wells Fargo, it's well ahead of Citigroup.
So solid performance metrics then.
Exactly. And if we connect this to the bigger picture, Bank of America manages this huge, diversified balance sheet. Its debt levels are pretty typical for a large bank, nothing unusual there. And its cash flow is steady. The price-cash flow ratio is 9.05. Plus, the company maintains strong capital ratios, good access to liquidity, basically no major red flags in recent filings.
Okay, so it sounds like a really solid player fundamentally. What about its competitive edge?
Yeah, that brings up its market standing, which is crucial. Bank of America is widely recognized as one of the nation's top banking franchises. It's got this diverse business mix: consumer banking, wealth management, investment banking.
Right.
It enjoys significant scale advantages, a truly nationwide footprint. That gives it a pretty strong competitive moat within the U.S. banking sector. Essentially, there aren't any obvious structural weaknesses threatening its position right now in the U.S. market.
Got it. Stable foundation, strong moat. But here's where it seems to get, really interesting. One source described Bank of America as walking a tightrope because of its sensitivity to interest rates. What exactly does that mean for the company's future? Why are they on a tightrope?
Yeah, that tightrope analogy is pretty apt. Bank of America's recent performance has been heavily driven by its net interest income, or NII.
That's the difference between loan earnings and deposit payouts, right?
Exactly. It's that spread. And in the second quarter, the bank generated $14.7 billion in NII. That really helped drive a 6% year-over-year increase in their retail banking revenue. Management even projects NII to reach between $15.5 billion and $15.7 billion in the fourth quarter of 2025. So they're still expecting growth there.
Okay, so higher rates have been good for them.
Very good. But the challenge, the tightrope part, is that the company is among the most interest rate sensitive major banks. This works great for them when rates are rising or stable, like we've seen, but it becomes a potential liability if rates start to fall.
And are there signs that might happen?
Well, yes. We've seen signs of a cooling U.S. economy. In fact, Bank of America's own strategist recently revised the year-end forecast for two-year Treasury yields down to 3.5% from 3.75%. And the 10-year yields were trimmed, too, to 4.25% from 4.5%.
Interesting. So their own team sees rates potentially coming down. What does that mean for potential Fed cuts?
Well, softer labor market data, shifting Fed risk assessments, it's all increasing speculation about cuts. Now, the bank itself officially expects no Fed action until the second half of 2026.
Right.
But their rate team thinks there's a greater chance rates could fall sooner. And actually, market swaps are pricing in more than 2 rate cuts by December. There's even like an 80% chance of a quarter-point cut as soon as next month.
Wow. Okay, so a real divergence there between the official line and market expectation.
Absolutely. And if those cuts happen, it could compress the bank's net interest margin more rapidly than less rate-sensitive banks. We've already seen their net interest yield decline a bit from 2.08% in 2023 to 1.97% in 2024, and it's sort of stabilized around 1.94% in Q2. Falling rates could accelerate that compression.
That tightrope analogy makes a lot more sense now. Okay, so beyond the fundamentals and this whole rate environment, what do the valuation metrics and technical indicators tell us? Is it a good time to actually buy the stock based on price?
Right. Let's look at the valuation. Connecting this to the investment landscape, Bank of America's metrics are pretty illuminating. Its trailing price-to-earnings ratio, PE, is 14.56. Price to book, PV, is 1.34, and price to sales, PS, is 3.72.
And how does that stack up against the competition?
Well, compared to its major peers, it's a bit more expensive than Citigroup, but less expensive than Wells Fargo. So it suggests it's neither, significantly undervalued nor really overvalued at current levels. It seems fairly priced, actually.
Okay, fairly priced. What about price targets? Where do analysts see it going?
Yeah, looking at the forward consensus price targets, they tend to cluster around $50 to $52. That implies, moderate potential for price appreciation, maybe 6% to 10% over the next year.
Moderate upside.
Moderate, yes. Though, it's worth noting, there's one estimate from Morningstar that projects a fair value way up at $97.
97, wow.
Yeah, it appears unusually aggressive compared to that $50, $52 consensus. A real outlier.
Definitely something to keep in mind. What about the short-term trading picture? Any signals there?
The stock has recently been trading between $44 and $50. Support seems to be holding near $44, with resistance up closer to that $50, $52 range. It is currently trading above its 50-day moving average, which is $46.60, and its 200-day, which is $44.37. That's, a modest bullish technical sign.
Okay.
However, the 14-day relative strength index, the RSI, is at 52.53. That's pretty neutral territory, not overbought, not oversold.
Yeah.
So overall, the short-term trend is kind of neutral to bullish, but with only moderate momentum. There's no strong directional conviction right now.
Okay, so no strong technical push either way in the short term. We've covered the solid financials, the rate sensitivity, valuation, but what else might sway Bank of America's performance? Any other risks or potential catalysts lurking out there?
Yeah, that brings up the broader environment, doesn't it?
Yeah.
Short term, the big catalyst is probably the upcoming quarterly earnings report. Surprise upside in NII or maybe lower than expected charge-offs. That could definitely lift the stock.
Makes sense.
And of course, broader macro data, inflation reports, jobs data, those will always impact the whole banking sector significantly.
Right. And for long-term investors, what should they be thinking about? I also saw some mention of political pressures. How serious is that?
Well, for the long term, potential benefits could come from things like cost cutting, more advances in digital banking, maybe regulatory shifts that favor the industry. But there are definitely risks too. Credit risk is always there, potential losses on consumer or commercial loans if the U.S. economy really slows down.
Standard banking risks.
Standard stuff, yeah. And regulatory or legal risks, those are just part of the game for a bank this size. Now, the political angle, yeah, one source did highlight that Bank of America has drawn criticism from President Trump, and it suggested the potential for retribution, maybe an executive order, that adds this layer of political uncertainty that could, create downside volatility kind of separate from the fundamentals.
That's certainly a unique risk factor to consider.
It is. And it's also worth noting, one of the sources we looked at while discussing Bank of America actually pivoted quite strongly. It suggested that certain AI stocks might hold, quote, greater promise for delivering higher returns with limited downside risk.
Interesting comparison. What's the takeaway there? That BAC is maybe too boring?
Not necessarily boring, but it highlights that ongoing debate, right? Stability in established sectors versus maybe higher growth potential, albeit with different risks, in areas like AI. It just shows that even when analyzing a solid company like Bank of America, some analysts are looking elsewhere for perhaps more exciting upside. It's about where the market sees the biggest opportunities right now.
Got it. Perspective is key. So let's try to wrap this all up. Given everything, the strong fundamentals, that interest rate tightrope, the fair valuation, the external risks, including the political stuff, and this AI comparison, what's the overall investment thesis summary for Bank of America? Is it a buy, and who should consider it?
Okay, summarizing based on the sources, Bank of America looks fundamentally strong, solid competitive position, lots of analysts like it, 17 out of 22 rated a buy.
Its current price doesn't scream undervalued, but the risk-reward seems pretty balanced. The consensus points to that moderate upside, maybe 6–10% over the next year or so. So it seems generally better suited for long-term investment, given the steady fundamentals and the potential for better returns once the macro cycle normalizes. Near-term trading upside looks kind of limited, and the technicals aren't showing a strong push, so maybe not ideal for quick gains.
All right. So there you have it. Bank of America presents this balanced picture. Strong financial foundation, good competitive moat, but definite sensitivity to interest rates and these broader economic and political currents. The question of whether it's a good time to buy now really seems to hinge on your investment horizon, right? And your comfort level with those risks, especially around interest rates and some of those outside factors. We've laid out the key insights, the data points from our sources. Now, here's something to think about. In a world where even financial giants like Bank of America are clearly sensitive to shifting economic winds and, yes, political currents, how do you personally weigh that kind of stability and maybe a dividend against the potential for disruption and much faster growth in other, perhaps riskier sectors? What does long term investment really mean to you in today's market, which moves so incredibly fast?